Euro parity with the dollar by www.forexconspiracyreport.com. The euro has been on a downward trend against the US dollar for most of 2015. It has fallen 10%, and many expect the euro to fall to parity with the US dollar. On CNBC, a Forex trader warns, however, that continually shorting the euro might be a mistake. As the euro falls against the dollar, investors that have piled into short bets against the euro could soon be in for trouble, according to one trader. Almost everyone on Wall Street hates the euro right now, and everybody is convinced that it's going to parity, Boris Schlossberg of BK Asset Management said Tuesday on CNBC's Trading Nation. And it very well may, but not before I think it hurts quite a lot of complacent shorts. The euro has fallen almost 10% for the year, recently landing at about 1.09 against the dollar. Schlossberg said he believes the euro will likely rise to 1.11 before drawing closer to the dollar value, which could deal a blow to some short positions. Everybody is sort of piling into the short side. If we go 5 pennies against them, they're going to feel some pain, Schlossberg said. Mr. Schlossberg offers reasons for his opinion. 1. The recent Greek debt deal has calmed markets. 2. Low oil prices and low interest rates are good for the euro. 3. The U.S. Federal Reserve will probably wait until after September to raise interest rates. In short, euro parity with the dollar may happen, but not all that soon, and progress there will not follow a straight line on the Forex charts. Was the euro an epic mistake? Writing in the New York Times, Paul Krugman comments on whether or not the euro, a common European currency, was a good idea in his article, Annoying Euro Apologetics. While the European project has at every stage combined economic objectives with broader political goals, it's about peace and democracy through integration and prosperity, the project can't be expected to work unless the economic measures are a good idea in and of themselves, or at least a non-catastrophic idea. What happened in the march to the euro was that European elites, in love with the symbolism of a single currency, closed their minds to warnings that currency union, unlike the removal of trade barriers, was at best ambiguous in its economic logic, and arguably even ex ante. A very bad idea indeed. As the euro falls towards parity with the dollar, it helps European businesses compete with the rest of the world. But for a country like Greece that is deeply in debt, a better choice would have been to have been part of the free trade union and have its own currency. The Greek currency would have devalued as debt increased, thus decreasing the debt burden and making it manageable. Euro carry trade. The Wall Street Journal discusses the euro carry trade and suggests that it will be brief. A trade that takes advantage of the Eurozone's low interest rates is about to come back into vogue, like many summer trends expected to be passé by the fall. The tried and tested carry trade involves borrowing money in a low-interest country with a weak currency and investing where a currency's returns are higher. The trade works best if the currencies being used are experiencing relatively low levels of volatility, minimizing the chances of getting wrong-footed. Some strategists think the resolution on Greek talks, for now, is about to create the perfect conditions for an increase in euro-funded carry trades. This would seem to be a good idea if you believe the euro will steadily fall in price. You convert euros to dollars, get a better interest rate, and convert back to buy more of the now cheaper European currency. After all, we are going to see euro parity with the dollar, right? Let's go back to the initial argument from the gent on CNBC. The euro may continue to fall, but not in a straight line. Any traders who get caught on the wrong side of a short position, or carry trade, could get hurt. For more insights and useful information about trading foreign currencies, visit www.forexconspiracyreport.com.